In our last video, we shared with you our Zerodha's verified P&L for the months of April and May 2025, where we made a little over 35.5 lakhs through swing trading. We received a ton of messages after that video asking about the actual strategies we used. So in this video, I'll walk you through two of our most frequently used swing trading setups. These are the patterns that we use almost every week, and they've been working quite well for us. However, before we jump onto charts and strategies, there's something much more important we need to talk about. You can learn n number of strategies from YouTube, books, Twitter, etc. However, none of that matters if your mindset isn't right. When we started, we were guilty of this too. Jumping from one strategy to another, taking impulsive trades, not really taking it seriously. It was only when we started trading like a real business with a system, clear rules, processes that things started to change for us. So here are the 6 most important mindset principles that we follow every single day that help us succeed in both swing trading and investing. First, identify whether you're a trader or an investor. A lot of people say they're trading. However, the moment a stock falls, they switch to being an investor. That's not a strategy, that's pure confusion. We have personally seen this happen so many times. Someone enters a stock for a short-term trade, 10-20% dip, and suddenly it becomes a long-term bet for them. That's how people get stuck in poor trades, sitting on 50 to 60% losses without any exit plan. If you are a trader, cut your losses early and protect your capital. Period. Personally, one of the best things we did was create 2 separate accounts, one for trading and one for long-term investing. The separation alone has created so much clarity for us. But what about investors? Should they never sell a stock even if it's in red? Here's a very interesting story I read some time back that answers this question perfectly. So there's this man who runs a mirror shop. One fine day, a nearby mirror shop that was going to shut shop, they started a clearance sale, 50% off everything. For numerous weeks, no one entered this man's shop, and those who did, they demanded a hefty 30 to 40% discount. This man was completely clear in his mind. He said, if a mirror has minor scratches or is somewhat damaged, sure, I will sell that at a discount. That actually makes sense. But why should he discount his best pieces or panic sell his inventory just because someone else is shutting shop? Just a mere 2 weeks later, the clearance shop closed. The customers came back, his business started bouncing back, not because he reacted, but because he stayed grounded in reality. Same applies to investing. If the fundamentals of the business are intact, no amount of price dips or market noise should affect your conviction. However, if you realize that the business itself is deteriorating, that's a broken mirror. You must exit. No ego, no emotions. Mindset number 2. Treat trading like a business. This isn't luck or gut feeling. There's research, planning, capital allocation, much like a business. And like a business, there are good and bad days. We personally built SOPs for our trades, tracked every single entry and exit, and reviewed our performance regularly. That's when trading really started to work for us. Mindset number 3. Start a trading journal. You can start with a simple Excel. Enter which trade you're entering, why you're entering it, what setup you're using, your target, your stop loss, and the ultimate result. Do this activity for the next 3 months. Mark each trade as success or fail and analyze this data. You will discover which trades work best for you based on your personality and risk appetite. Think of this as your own trading dashboard. Once you start doing this, your conviction in your trades will also improve. We have created a simple and clean Excel template for journaling. You can find it in the description box below. Mindset number 4. Process over outcome. A trade hitting stop loss does not make it a bad trade if you follow the system properly. I've had perfectly planned trades go wrong, but we never call them bad. Process is what builds consistency over time. Mindset number 5. Be okay with waiting. You don't need to be in a trade every single day. We have had some of our best trades after noticing a setup for weeks on stretch. Sometimes doing nothing is the best trade. It's all about patience and timing, not activity. Mindset number 6. Losses are part of the game. We personally have had bleeding red trades, consecutive ones even. But we kept our losses small because they're inevitable. Think of this like cricket. Sometimes even the best players get out early. That does not mean they stop playing. What matters is the average over time. Before any chart patterns or indicators, build this mindset. Because when you're mentally clear, these strategies work way better. And most importantly, you'll stick long enough to actually see success. Alright, let's now dive into 2 swing trading setups that we most frequently use with a bunch of examples. Before we start, I do want to call out that we only invest or do swing trading in fundamentally sound companies. We spend hours to research which company we actually want to invest or trade with. The actual entry and exit points are decided by these trading setups. Strategy 1. Cup with handle breakout. One of our most frequently and favorite used setups is the cup with handle breakout. It's clean and simple and works very well for us. Let me give you a recent example, TransRail. We were tracking the stock for a while now and we noticed that it was forming a cup with handle pattern on the daily chart. So I'm on TradingView and as you can see the chart pattern for TransRail here, we noticed that it was forming a cup with handle pattern here along this neckline. So, we didn't enter immediately into the stock. We actually waited for a day for confirmation here, and once it was actually sustained, we entered at 543 on 15th of May here, as you can see. So coming to the exit price, we set it at the resistance line. So as you can see, once it hit 626, we exited the stock, and in a matter of 11 calendar days, we were able to book a profit of 15.23% on this one. A very clean and simple setup that works really well. I want to show you another example of how this plays out. So here I've opened the chart for data patterns, and as you can see along this neckline, a cup with handle is forming, right? So based on this, we planned our entry on 16th of May, as you can see at 2693. And the very next day, when the price was nearing the resistance line, we sold it off at 3032. So that's a 12.58% profit in just one single day. Coming to strategy number 2, which is even simpler, a trend line. Basically, the stock keeps moving 2 lines continuously, the support and the resistance line. You just need to identify the lines and plan your strategy. To identify the lines, you need to join 2 consecutive resistance and support points. Let me show you directly from an example. So here we have EFCIL, and as you can see here, you identify 2 consecutive support points, and there you have it, your support line, and then 2 consecutive resistance line points, and there you have your resistance line, right? So you identify your entry and exit point based on these 2 lines. Near the support is when you buy it, and near the resistance is when you sell it off. So as you can see here on 9th May, we bought it at 268 near the support line, and while it was nearing the resistance line, we sold it off at 331. That's 23.34% profit in just 14 days. Coming to Krishna Defense, we were able to identify both the support and resistance lines, as you can see here, and we entered this stock at around 27th of May at 806, and when it was nearing the resistance, we sold it off at 1021 on 6th of June. So that's 26.71% profit in just 10 days. These 2 strategies, cup with handle and trend line, are nothing fancy. However, with the right mindset, they can do wonders. And just to be clear, you're not always right. There are losses. However, it's the consistency that compounds over time. If you want to understand the technicals behind these 2 topics in detail, you can find a video on technical analysis that covers them thoroughly. If you are a working professional or someone who does not want to sit in front of charts every day throughout the day, then these 2 setups can work really well for you. Let us know in the comments if you want a deeper breakdown of more trades, or if you want to know how we build our watch list. Let us know if you have any other questions in mind, and we'll try our best to answer them. I hope this was able to help. If it did, please do hit a like and subscribe. I'll see you in the next video. Till then, happy investing.